Hello and welcome to DigFin VOX, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you like this program, share it, like it, subscribe. My guest today is Ned Phillips, co-founder of Bambu, a B2B wealth tech. After 8 years, Bambu is closed. Ned was kind enough to speak to me about the lessons learned, both for other fintechs, for the banks that he partnered with, and for everyone in the fintech community. Ned Phillips, welcome to DigFin VOX.
Jame, I think we have known each other for, I'm going to say 25 years. It might be longer. It's always a pleasure, man.
Yes. We started, our careers dovetailed a little bit in Hong Kong, in the publishing world, in the 90s, I think. That long ago, yes.
You were one of the OGs of publishing, and I worked at another company, and I respect I think you've been in the publishing journalism game longer than most.
Yeah, still here, which is a minor miracle. But obviously you've taken an amazing career journey. You've had a number of roles after that, but you're best known to me, and I think to people in the fintech world, for being the co-founder of Bambu in Singapore, one of the first wealth tech companies. It sadly has shut down, so I want to talk a little bit about what happened. But first, why don't you tell us a little bit about Bambu? What was I know it went through a few pivots, but really just kind of give us the lowdown on its mission and what you guys were doing.
Sure. I don't know if we pivoted too much. We would always, maybe smaller ones. B2B wealth tech. In 2016, the idea that wealth would be digital for everybody wasn't as clear to everybody. Today I think people can debate robo-advisors as a business model, but at least people accept that having the ability to do your financial planning or wealth management digitally is a thing.
Yes.
So in 2016, that was the kind of mission we were trying to solve in the B2B space. How can we build a tech stack that can enable banks, asset managers, financial advisors to offer a digital product? And when I say digital product, portfolio selection, financial planning, what you would call a robo-advisor today, fully transactional. So that's what we said. That was our mission. Could we build that and then sell that on a B2B basis as a tech business to financial institutions? That was our mission.
And from the outside, it looks like you succeeded in that mission in many iterations. You had a client base of banks around the region, I think beyond, right? You tell us a little bit about some of the institutions that you're able to name that worked with you and what they wanted from you guys.
Yeah, we did. We were very fortunate to work with, which is public knowledge, Standard Chartered, earlier on with HSBC, with Franklin Templeton. We previously worked with Principal Asset Management, and as far back, we worked with one of the biggest banks in Brazil when we started. Probably shooting a bit far afield, but when you're a startup, you do a lot of work on it.
Yeah.
I think for a lot of institutions, building digital wealth is complex. The output might look simple, selecting an ETF or a mutual fund to achieve your financial goal. But, the inside parts, it's hard, the middle and back office. How do you fractionalize an ETF? How do you put that into goals? How do you connect to broker custodian? That's the problem we were trying to solve. Not so much the portfolio selection part, which was being solved by other people, but, how do we build a great customer journey? And how do we integrate that to an existing ecosystem? And that's why our clients wanted to talk to us. We'd really thought deep and hard about that.
And that would also include things like how you break down the fees amongst the various counterparties, the asset management manufacturer, the distributor, and so on.
It did, but back in 2016, things like fractional ETFs, which we accept today, was not really a thing. And we worked with some of the broker custodians who offered that. And when we went to the banks, they were like, wow, okay, this is cool and new. And we also took that fractional ETFs or fractional funds were a little harder, but put it into goal-based planning. We had pushed on goal-based planning. So buying a investment product to achieve your goal and being able to split products between goals to be able just to offer customer goals in a digital way was quite new. So that's when you say, why these banks kind of want to work with us. Obviously, there's a range of, I can't speak for them why they wanted to work with us, but a range of factors. But the tech and the thoughts and the way we were building was something that they hadn't already built.
Yeah. And along the way, I mean, what was the experience in terms of the way that you helped the banks change their culture, the way they thought about product or the way they thought about distribution? I mean, do you feel you had some sort of impact in helping these institutions evolve?
Jame, it's hard to be, founders can be both self-critical, but also overestimate their abilities, right? I think we're guilty of both, I think if you're a founder, you believe you are driving change. So did Bambu play a small part in helping digital wealth landscape change? I think we did. But without and I'm talking about Asia or Singapore, without Auto Wealth or Endow Us or Stashaway or the OGs, Betterment and Wealthfront, Bambu wouldn't have existed if Betterment and Wealthfront hadn't stood up in 2011 and 12 in the US and said, wealth must be digital for everybody.
Right.
Did Bambu help banks, I use the word banks, financial institutions, asset managers, banks, etc., realize that really that's what they have to do, and that change was coming? Yeah, and we talked to, as you know, Jame, Bambu wasn't shy about talking about our mission. We were at many events, we had our own podcast, newsletters. We talked passionately about, not just about Bambu, which I was passionate about, but we talked about the problem statement, that wealth, tech, or digital wealth should be available for all. So do I think we played a small part in that? I do. Was it a small part? Just a little.
So on the surface, from the outside, Bambu appeared to be quite successful. And I think that's partly down to your team, also down to you, Ned. I mean, you're a great salesman, and
Thank you.
You know how to do marketing, you know how to tell a
Thank you.
story.
Thank you.
And so you were always on, I'm sure, everybody's radar in this industry. So what were the hard parts that obviously something must have snowballed into a situation that made the business untenable? Can you tell us a little bit about that?
Sure. Well, and I appreciate your good words, James. I mean, I think all founders are passionate. I'm not sure why my DNA is quite so energetic. I find it hard to not be energetic. So I appreciate, I think, and as a sales guy, it's good to have that kind of positive energy. So I appreciate that.
I think anybody who's a founder or in sales is by nature, they've got to have some optimism. And it's super weird being a journalist because I'm supposed to be the crusty skeptic. But at the same time, when you launch your own media business, you also have to be suddenly super sunshiny. So it's different skills. But anyway, you wear that well. So, but let's talk about
Sure.
let's talk about
Sure.
the hard realities that obviously the business encountered.
Sure. Obviously, I've rolled it around in my head, and obviously we've talked about it, but obviously, so we didn't get to profitability. Why? We were aiming to be a product company. So we built a range of APIs that meant that everything a robo-advisor would need, financial planning, portfolio management, integration, broker, custodian, etc. One of the great challenges of being a product company when you're integrating to large enterprises, financial institutions, is there's always customization needed.
Right.
And this is the balance. How much customization are we willing to do each time? And our business model was we got paid for customization upfront, and then also recurring based on the number of users or AUM. But like a lot of startups, you're willing to maybe do that customization at a lower cost, perhaps even a loss, to win that client to get the back end. And I think it's that balance. And I've spoken to a lot of founders about this, James. Is this in this B2B product, if you're going to enterprise, there's some level of customization needed or not. So, when you say what snowballed, as I look back on it now, I think the true path, if your product, you must just be that. So we built something called Bambu Go, which was a ready to go robo-advisor, but it was, just not very customizable, but it is what it is, right? You either buy it or you don't, right? Mm-hmm. Or we had like a customizable where we would build what you wanted. But really that should have been really expensive, 7 figures and above. But like right. A lot of startups, you're willing to take the middle road. You do some customization for some amount of money. And again, that's on us. It's not on our clients. We accepted those terms, But yes. But if you ask did we have a lot of success? Yes, we won some big deals. I think we publicly announced like a couple of years ago, we got to a couple of billion of AUM across our clients. We had definitely been, a lot of people were using our technology. But making that a viable reality when you're a venture-backed firm, when you're looking to grow, and again, it's on us, like in the end of the day, That is the balance. So I think, James, it really does come back to that central theme. And having spoken to a lot of B2B product companies who look to customize, can you charge enough for the customization? Don't take too much risk on the customization, because you can never be sure how many end users there will be, because ultimately it's the enterprise who decides how many end users. So that would be the crucial part.
Okay, that's very helpful for a lot of people, I think. Um, what is the issue with funding? Obviously, this has been a very difficult venture environment. The wheels came off in early 2022 as interest rates began to climb rapidly. Did you have issues with just runway running out and tough to find new sources of venture money, or did that not play a role?
There's no doubt that from, well, when we started 2016 up until, as you said, interest rates, there was definitely it was more of a growth mindset around raising capital. So if you could show that you were getting traction, then the growth capital would come. People would say, okay, these guys are growing. It's not, we don't have the exact day that they'll be profitable. They're not profitable yet. There's no doubt that that mindset changed. And a lot of people were scrambling to be profitable. And I think, as we said clearly is what we said, we couldn't get to profitable in time. So is fundraising harder? Yeah. But, ultimately, I think this is the cycle, Jane. You've been here long enough to know that at sometimes capital is looking for, those exponential growth with profitability willing to be pushed off into the distance. When interest rates are 0%, when interest rates are 5%, the cold, hard reality of where that is. So, and again, look, if you are a wordsmith, Jame, the word business declares that you should be selling products for more than you make them, right? So if you took it back to cold, hard reality, getting to profitability should be what a lot of people do day one. But I think the reality is, in fintech, and I think you wanted to talk about the realities of running fintech as venture backed, that's the path you have to tread. So yeah, times change, and we tried to adapt as best we could.
Anything that you could say about where is, and not necessarily just about Bambu, but where is the B2B wealth space now in Asia? Do you see other companies flourishing? Do you see everybody kind of still, scratching their heads trying to figure it out? How is that business changing as the banks themselves perhaps become a little more comfortable with digital solutions?
Wealth tech in Asia. So you asked the question, how is wealth tech in Asia? It has been harder, but it will still grow.
Mhm.
There's no doubt, right? As the business came to an end, we still had plenty of banks asking us about tech. The number of RFPs is increasing. Is it hard for some of the homegrown players? Yes, it is, James. It is. And one thing I've learned about wealth tech, scale matters. FNZ, who started as a small company, have scale, right? And, for a lot of banks, it's while it might be more expensive to buy scale, it's more comforting as well.
Mhm.
And I think that's the reality. I think as a B2B wealth tech, if you can get to 10 to 15 years and get profitable within then, you'll survive, right? Or maybe sell out in the first few years, right? That 5 to 10 years is the scary part. For us, we found it too. We were 8 years. I think if you lasted 10 to 15 and get profitable in there, you will grow on. So to your wealth techs in Asia, is there still demand? Yes. Are there some of the legacy players still here growing? Yes. I just met a wealth tech today. Oh, James. Young guys, they're starting on their path, and they were like, oh, it's so exciting to start now. It's like the right time. I thought it was the right time 8 years ago. So, wealth tech is still flying. It's hard, James. I'm not going to paint
Yeah.
anything about it.
So
But to your,
what would be the advice you would give to those young folks that you just met who are, so keen to launch their wealth tech today?
I did, and I did give them advice, right? And remember, I'm not a product guy, so for me, I'm a sales marketing. Obviously, I understand product because I helped build Bambu. What I commented on, choose. Are you product? And if you are, sell that product. Don't customize it. Pure SaaS. If people don't want to buy it, fine.
I'm fine.
If you want to customize it, sure, you could take one loss leader for the logo, right? So you do it for a great big bank. You take a bit of a lost lead to get the logo to win others, fine. But don't do that again. Then don't take risk on the integration, because a lot of wealth tech is about integration. You know, Jame, you understand that too. These enterprise deals, a lot of integration, there's risk. What I said to them is, these are, to me personally, and again, you know, I just gave advice whether they take it or not. If you're pure product, that's your product. And we can talk about sales in a minute. If you customize, don't take risk. Because if you integrate it and for some reason it doesn't flourish at the bank, you're not going to get the trail revenue. So make sure that has good, solid margins. That's my advice.
And that integration question, that is, I mean, how do you sort of risk manage that? Is it a question of just the liability if it doesn't go wrong is on the bank, not on you? I mean, if someone wants to point fingers, or it's just,
No.
it's the people who take responsibility for it, not your people. How's that work?
No. There is something you have to deliver, right?
Yeah.
It is a working robo-advisor app, to call it in the simplest terminology. And you could bid for it. And generally, you know, so if that work came from what's called a time and materials firm, you know, a services provider, they would just say, well, it takes as long as it can. You just keep paying for people, right? And they're making margin on that because they have no trail once it goes live, right? They're just time and material. As a product company, which we were, you generally have to fixed bid for that. So you say, okay, it costs X 100,000 to do that implementation. As we all know, projects take longer. There's a new scope of work. That's the challenge. How do you price that? And over time, we got better at that pricing. But when you're a young company, particularly when a huge bank says, oh, I'll give you a few 100,000, you're like, oh my God, this is amazing. And then of course, and again, I do not subscribe to, oh, that bank sucks or whatever. I don't. Big banks are hard to work with, not because they have bad people, they have great people. But I like this phrase. You put enough good people in a room, bad things come out, right? Like, it's just hard managing a huge organization.
Yeah.
It just takes time. So I gave them advice, be clear. And the second piece of advice I gave them, which will not surprise you to know, is be very clear about your marketing, your CRM, your content, podcasts, newsletters. In the new world of B2B, it's not about saying, my tech works, buy my tech, buy my tech.
Right.
It's about
That's
content.
almost a commodity.
Commodity, but thoughtful content. And look, you're a content provider. As you know, I like content. As you were on my podcast, you were very kind, but we didn't talk about Bambu. I was trying to provide, I'd like to think about wealth tech. And if you want to have that conversation about wealth tech, talk to Ned, right? And of course, in talking to me, you can see that we're passionate and we know what we're doing. And then ultimately they might say to us, or the client would say, so what does your tech do? And that's what I said to these guys. Be thoughtful, talk about the problem you're solving, the client's problem. This is what you're trying to solve. And then once you engage in that conversation through posting on LinkedIn, talking about it, newsletters, podcasts, just being passionate about it, then they'll talk to you about their tech. So I gave them advice. Be clear about your problem statement and talk about it a lot and take the path. Customize, charge them clear money or product, stick to it.
From the bank or asset manager's point of view, it's no good for them to see a partner close. But obviously they operate they're not founders. They're executives or managers in a big organization. And they've got their own complexity that they have to deal with. They've got compliance teams or they've got budgets and so on. So what would be your advice to some of those folks who you would have, your erstwhile clients, because it's in their interest to support the fintech community. They're not there to subsidize that community, but they're there to make sure that they've got good partners that help them because exactly, they've got the problem that you're trying to solve. So I'm not trying to put a particular burden on them, but how should they be aware when they're dealing with fintechs of the ways that they can sort of make sure that their bank doesn't end up being like a bull in a china shop and breaks all the dishes?
I have thought about this, James. I'll be lying if I said I didn't. And look, they're all good. Everyone's good, I won't say everyone's good people, but everyone's good people. They're all trying. If you work for an organization that has 100,000 people, it's just a reality. Things are hard, right? You can't just, look, Jame, I'm sure one of the things as far as I know, you've always worked kind of either for yourself or, you can make a decision, Jame, about what to write and just write it, right? That's kind of how life works for you, right? But if you were suddenly the corporate communications guy for a big bank, You couldn't, right? And that doesn't mean your quality of your writing is any less. It is reality. Here's my advice. Two pieces. Treat your fintech like a partner, not a vendor. Like they're not a vendor, they're a partner. Like you have to work with them. When they tell you, it has to be two-way, like equal respect. Remember, this fintech's desperate to make this project work, right? It's not trying to make it hard,
Right.
but come at it as if this is our problem, join. This idea that the bank is paying, therefore the fintech has to do what they say. I understand this client-customer relationship. I understand that. But if you want to, ideally, what is it? It is that level, which is, guys, we have 9 months, 6 months to deliver this. And if the fintech pushes and says, no, guys, you can't do that, listen, accept it. Remember, like sometimes I would meet if you meet a client, and I used to say, guys, of course, we listen to everything. We understand. I've only thought about robo for 8 years. Like, it's all I think about. So, like, if there's a path and we both have to choose, if it was about banking, you choose. You're the bankers. If it's about robo, definitely good. So, in general, we had some great partners. The second one is this. When you're considering the pricing, don't tell the fintech the price. Ask them what is needed to make it viable for you. You have to have a good relationship because you don't want the fintech to say, "Oh, I need $10 million," right?
Yeah.
But you must ask this question. Say to the fintech, if you're losing money on this, tell us. If you're losing on this, tell us. It's really important. And of course, there's some trust, right? Because you don't get to see everybody's. But if they're not subsidizing, but remember, the fintech can't subsidize the bank either. It's a two-way thing. And, that can happen. So those two things, really believe your partners and make the pricing fair for all, because that extra 50, 100K, I know it's your budget at the bank, but that's a lot to a little fintech.
Yes. All right. Well, this has all been, I think, great insight. I think this will, really helpful for everybody in the fintech ecosystem, and not just in wealth tech. So let's talk a little bit about you, Ned. I saw you just turned 57. You posted a video of you running 57 kilometers. You are insane.
Well, I thank you, Jame. I appreciate. I think people know I love running. We all have our hobbies. So I love running. I'm actually in the Singapore ultra running, a niche of ultra running called Backyard Ultra, where we run 6.7K an hour every hour on the hour until there's no one left. And I'm hoping to run 48 hours, so that would be 320K. And Jame, I know this video is going out a little bit in the future, but this weekend I'm running 100 miles to the start of a 5K race. I'm running 160K in 24 hours to the start of a 5K race. Running is my meditation, my therapy, my me time. And look, I've been doing it 30 years. I appreciate 57K is a long way for most people. But you write books, like you tell me how many books. I couldn't imagine doing what you do, right? We've all got things that we do for ourselves. So yeah, I'm gonna run. And at the moment I'm consulting for a range of startups, fintechs, other people, helping them on what's called sales efficiency. So you very kindly said that Bambu had done well in sales. Like, I meet firms who don't have CRMs. I meet firms who don't have who don't post on LinkedIn. I meet firms who don't write newsletters. I'm really passionate about how do we generate leads. And also I'm helping a few, I've been in Asia a long time, a few American and European firms who are wealth techs would like to grow in Asia. And I think it's, reasonable to suggest I might be able to just at least give them guidance about market entry. So I'm doing consultancy at the moment, taking stock. I'm not going to do another startup right now. I think my wife would kill me if I did another startup right away. And seeing how life plays out.
Okay. You're gonna stay in Singapore?
I am. Look, I've 34 years in Asia, Jame. Singapore's been incredibly kind. What am I going to do? Go to London? Who knows me there, man?
Yeah, the network's out here.
It just is, right?
Yep. And your team, I know you had a co-founder, Aki, who was the technology guru for you guys. Do you see an opportunity to work together again, or is this probably just a special time and that's going to be it?
Yeah, it's a great question. Look, the dude was I was going to say he was the brains. I certainly was not the beauty. He was the brains. I was the I don't know, the energy or whatever you might, whatever terminology we might go for. Aki's very keen on the AI side of it, and which is great, which is fantastic. Very thoughtful around there, and I think he's going to go down that path. Well, he is going down that path. I adore sales, so I think that was a moment in time. We did a thing, as they say. Didn't work out how we hoped, and of course we had wished for a different outcome. My energy is still in wealth tech, equity tech. For me, Jame, I was an equity trading guy. I still think there's a lot of work to do there. But yeah, no, look, I wish him absolute good success in what he's doing. And a lot of my team, there's still a few of my team looking for some jobs. Most of my team have been picked up because it's not a huge amount of wealth tech talent, right? You're going to find many engineers who understand how to code a fractional ETF dividend splitter.
Yeah.
Not really. So, if there's any wealth techs out there, I think most of my team have got jobs, but yeah, they're still a little bit of talent looking for work.
And if you were going back to that conversation you had with those young fellows starting their thing, if you were in their shoes today, what kind of company would you want to found now? If you decided to stay in fintech and you wanted to be a founder again, what would be the niche that you would go for?
Wow, man, I try not to think about it, James, because I can't do another startup right now. But
that's a tough question.
No, but it's a good question, man. Hey, look, I always like answering questions. Right now, I'm doing what's called services. As you know, I am helping people with my knowledge. And at the moment, I'm like, wow, it's like I don't have to build a product. It's like margin. Like right now, obviously, after 8 years of trying to build product, feeling that is incredibly, I have huge respect for people who do that. But if you talk about it, there's a company, in the equity world, right? It is still not available to all. And I know it's hard. So this is aspirational. I don't think I would start it, James. Right. But equity should be 24/7 all the time, down to the last dollar. I know the fractional, and it's not there yet. I still think that the true democratization of equity trading that everyone can have at any time for any amount should be there. I think it's there. So I would go back into my equity world and try that. But at the moment, I'm happy being a humble services guy and doing what I can using my knowledge.
All right. Well, sounds pretty similar to what I do these days. But Ned, thanks for your time. So normally I end these things, I say congratulations, whatever. In this case, I guess commiserations on a neat little fintech that didn't quite make it. So, but I appreciate your sharing your insights. I think very helpful for everybody else in the industry. And I think that's just kind of a hallmark of the way you've been running Bambu as out there to support the ecosystem and help everybody, including yourselves, obviously prosper. So good luck on your next venture and to your co-founders and team. And I'm sure that we'll look forward to seeing you and the rest of the Bambu folks continuing to play a great role in fintech in Asia.
I appreciate it, man. Well, look, Jame, thank you, man. I appreciate the opportunity. Always happy to share. And one thing I'll say is, if any founders want to talk about it, I'm happy to share. Look, I wish we'd done better. I wish we had got a different outcome. But, the lessons you learn are important to share. So thank you for giving me the opportunity.
Great.
Thanks, man.